Welcome back to Ben's Book Club. Today we are diving into the book, The Most Important Thing. Now, this isn't your typical how-to investing book filled with formulas. Instead, it's a guide on how to think, which, as we'll see, is way more powerful.
So, let me start by asking you a question, and I want you to be really honest with yourself. Do you think you're an above-average investor? Well, according to Howard Marks, the author of this incredible book, your confidence in answering yes is probably the first and maybe the biggest mistake you can make. See, to really beat the market, you can't just be good. You have to think differently than literally everyone else.
And that right there brings us to the core idea of the entire book, shattering what he calls the investor's illusion. And you do that by learning how to think on the second level. Like I said, this isn't a book of recipes. It's a manual for rewiring your brain.
So, what does that even mean? Well, to get it, we first have to understand first-level thinking. This is what most people do. It's simple, it's superficial, you know the drill. Hey, that company is awesome, their products are flying off the shelves, let's buy the stock. And look, on the surface, that sounds totally logical, right?
But, and this is a huge but, here's the problem. That simple, logical thought is the consensus. Pretty much everyone has had the same idea, and that means any big profit potential has likely already been baked right into the stock's price. There's no edge. Now, second-level thinking, that's a whole different beast. It's deep, it's complex, and a lot of the time it's contrarian. It forces you to ask much harder questions like, okay, sure, it's a great company, but at this price, is it a great investment? What is the market missing here?
So how do we actually build this mindset? Well, Marx gives us a few fundamental pillars to stand on. And the very first one completely flips our conventional understanding of risk on its head. You know, if you took a finance class, they probably drilled into you that risk equals volatility, how much a stock's price bounces around. Marx says this is a huge, huge mistake. Think about it. A stock can be super volatile on its way up. Is that a risk? Heck no. The real risk, the one that should actually keep you up at night, is the chance that you will lose your money permanently. Okay, so why does this matter so much? Because look, anyone can get high returns by taking on a ton of hidden risk. That's not skill, that's just gambling. The best investors know that the absolute most dangerous time is when everyone thinks there's no risk at all. And that's when your goal has to shift. It's no longer about chasing returns, it's about playing defense. Your primary job isn't to win, it's to not lose. Protecting your capital is what keeps you in the game long enough for the truly great opportunities to show up. And this focus on playing defense leads us perfectly into the second pillar, which is really the beating heart of value investing. It's all about understanding that critical, all-important relationship between price and value. This quote right here is everything. It's so easy for us to get caught up in the story, the brand, the quality of a company. But what Marx insists on over and over is that none of that matters one bit if you get the price wrong. Just think about it this way. You could own a piece of the best, most innovative company on the planet. But if you bought it at the absolute peak of a market mania, you can still lose a fortune. The quality of the asset and the quality of the investment are two totally different things. It's the price you pay that makes all the difference. Which leads us to our final major pillar, getting a grip on the fact that markets are not these rational, calculating machines. They are driven by something far more powerful and unpredictable, human psychology. And Marx has this incredible metaphor for it. He says the market isn't a random walk, it's a pendulum. It's constantly swinging back and forth between two emotional poles. On one side, you have euphoria and greed, and on the other, you have depression and fear. That calm, happy medium of fair value, the market hardly ever just rests there. And what's so crucial to understand about this pendulum is that it spends almost no time at all in that fair value center. It is always in motion, always swinging from one extreme, like euphoria and greed, blasting through the middle on its way to the other extreme of depression and fear. So, okay, we've got these incredible ideas, but what do we do with them? How do we actually pull all these pillars together into a mindset we can use every day? Ultimately, being a superior investor isn't about finding some secret formula. It's about building a superior thought process. And that means you have to be disciplined enough to stick to your principles. You have to be patient enough to wait for the right opportunity to come to you. You need to be deeply skeptical to question what everyone knows to be true. And maybe the hardest one of all, you have to be emotionally stable enough to buy when others are panicking and sell when they're popping champagne. Look, winning in the long run is a psychological game. It really is. It's about being more rational, more patient, and more aware of risk and market cycles than the person on the other side of the trade. So I'll leave you with this one last question to take with you. The next time the crowd is absolutely euphoric about an investment, what is your second-level thought? Subscribe so you don't miss an episode.